Hi, welcome to the Market Alert for Thursday the 29th of June 2017. So yesterday we saw the pound trading in a range until we just had Carney and Yellen speaking, and whatever was said sent the pound moving higher by over 100 points there. Unfortunately, we didn't get a signal because let me just remove that for a second and then put it back. And what we were looking for was this bar to close above this blue line here. Had it have done, then we would have been on board for that one, but unfortunately that wasn't to be the case. And then we had a signal late on in the session there, but then fortunately it wasn't filled, because the market then, after making its move, market makes a big move, then it's likely to trade sideways, which it has done on the overnight market. In the bigger picture of the pound, you can see the market trading up to the 129.77 area there, just about to hit it. Resistance there. We saw the market sell off when it got to this place last time. If it's going to move higher, it needs to drive through, and the next upside target will be at the 130 area, which is a significant point for the pound. Meanwhile, on the Dow yesterday, we had Carney and Yellen speaking at 2:30. By the time they finished, there was bullish news. We see the market moving higher. No surprise really, as I keep saying, they want the market to the upside, even though the Dow is looking weak. In the bigger picture here, you can see that we've got some resistance. Let's just draw in the fib retracements, and you will see the market at the 76% retracement there. Let me just drag these out a bit so you can see it. Get rid of the 62. So you can see the market's just above a significant area here, and it needs to remain above here to continue higher. Now, what we've got here is a very interesting picture. Actually, this is really important, this area, and the reason for that is let me just bring the chart back over a bit for you. I just want to show you what I'm getting at here. You'll see the market makes a move. It pulls back, it goes back up, fails to take out the recent high. There it comes down, goes back, fails to take out the recent high, and then the market down. Market puts in a new high above here and comes back. On this occasion, manages to take out the new high. Right, so if we go back to those now, I'm just going to change one of the settings here. I'm just going to remove the 62 and to click apply, and I'm going to come back to these areas. So we've got the high there, market comes back, and we see the market managing just to close above the 76% retracement, and then we get the high there. So you can see we have this sort of swinging effect. The market comes down. If it can close above the 76%, it will go towards the high. And I'll just delete that one. We'll move on to the next one. Just remove the extend right, make life a bit easier. So the market puts in the high, it comes down, leaves a low behind, and then goes up to 76%. On this occasion, well, you get it to the downside as well. So we see the market moving lower. There's the high. The market comes down to 76%. And you'll see the market oscillate all the way through doing this. If it's taken out, as in this situation here, and then the high is taken out, you will see the market continue higher. So we've got a situation here where we've got the implied volatility in the lows at the moment, and we've got this situation of the market coming down and now heading back. This is a crucial area for this market. If the market can't close above this area, we are going to see the market move to the downside. In order to move higher, which is why it's important to look at the bigger picture. It's going to have to drive through this area of resistance. If not, then it's going to head down this way. It's as simple as that, and that's why it's important that the market remains above this price here, 21,483, or above the 21,500 level. If you wanted it in whole numbers, that's what is needed to do. You'll also see that here we've got the high from Monday, Tuesday, Wednesday, yep, that was Monday, of 21,504, and then of course we've got the all-time high there of 21,539. Now, given the backdrop of uncertainty that is starting to build, this is how you can gauge when a market's putting a top in, whether it's going to be the top or not, is to look to see how much momentum it's got going back to the upside. It's that simple, and then combined with the lows in the implied volatility, which we'll have a look at. So when we look at the backdrop of the market, we've got the market trying to swing back to the upside, and then we've got the lows in the implied volatility. You can see each time it's swung in the daily chart, the market's increased slightly in the implied volatility as it swung back to the downside, but then found support, and then as it's gone back through that 76% and the high that was left behind, the market then has seen the implied volatility move back to the downside. So you're seeing the opposite in the implied volatility. Yesterday is interesting as well. Another thing to actually keep in mind here, that yesterday was exactly the same as it was during Tuesday's session, and yet yesterday the market went up 100 plus points. So again, that to me says that there is an issue around at this point, that the market and the traders see a bit of an issue, that the implied volatility didn't drop. Very, very strange. I would have expected this to have come back down to the lows yesterday, given the market's up move, but it didn't. So again, it's these small details that you pick up over time that think, well, hang on, there's something not quite right here. So that's the implied volatility. Let's just have a quick look at what news we've got out today. I've realised I've forgotten to do that, so let's just bring one of the charts in here. Let's have a look at the news. And anything in red, what have we got? A lot of European news. No, we've just got all the news is out beforehand. The important one really is going to be the final GDP. It's coming in at 1.2 for the quarter. Appalling GDP figure still. You know, we've had this for 10 years now. I've not seen 3% growth anywhere. Just massive bubbles being created. And even Carney the other day came out and said that he's set aside 11.4 billion for the possible bad loans. I'm thinking, well, what a surprise, you know. Honestly, it just beggars belief. But anyway, I'm not going to get on a rant about that. You know what the score is with regards to that. Plenty of other videos talking about it, but yeah, amazing. Never ceases to amaze me. Right, that will do it for today. If there's anything I will report in, it could be fairly quiet because there's not an awful lot of news, and the market made that big move yesterday on Yellen and Carney's comments. So you know, do expect the market to breathe. You're at that crucial level. Keep in mind 21,483. The market needs to stay above that in order to move higher. Right, that's it. Thanks for watching. See you in the next